to remind yourself and to remind others, when you are in the winning streak or losing streak, it's very important that you stay focused on your trading process and trading rules overall. So the only thing that is important is that you follow your trading rules every trading day. You should not change them, you should just follow them every trading day, and this is the only thing that is important. Why I'm telling you this is because many of you who are in the losing streak or winning streak, they want to change the rules just to, let's say, earn more. When you are greedy, when you're in winning streak, you like to be more greedy, you want to earn more money, you want to grow your account faster. And if you are in a losing streak, you want to change the rules because you want to get out of this streak as soon as possible. And this is purely human psychology. You want to stay grounded, you want to stay calm, you want to stay focused on your trading process and just execute your trading rules. And currently, as I said, we are in the winning streak. This is the 10th trade in the row, the 10th winning trade in the row. So we are not changing anything. We just stay focused. We're just executing our trading plan. And this is everything that is important. So in this video, this is the first trade of the week. In this video, for our YouTube followers, I want to go over the reasons why we traded this particular short trade on the euro-US dollar. Besides that, hard time frames are in the bullish structure, we took advantage of this shift on the lower time frames after the news came out. So I want to go over the reasons why we traded this. So I'm sure this will be helpful to many of you who are following me here. So this is the trade we took in our one-on-one mentoring training. So just by looking at the calendar, you can see that during the night and before the London trading session opened, we had some important news about JPY. So we had some interest rate decisions, and in the US session, in the New York session, we had the news about the retail sales, and we were watching this news to come out, and after the news were over, we took action on the euro-US dollar. So this trade was short trade. As you can see, this is what we were trading. We were trading this leg lower, and in this case we took classic 1-to-1 in terms of risk and reward ratio. As you can see, this price was very volatile, and price didn't just move towards the Asian session lows and the lows of the day for a classic base hit 1-on-1 in terms of risk and reward ratio, but this price was really volatile, and as you can see, we could even aim for more, but looking for those classic 1-to-1 in terms of risk and reward ratio trades, you can grow your account very fast without bigger drawdown, and this is very important. Now I will go over the charts I was sending over to my students today on this euro-US dollar, so you can get an idea, you can get understanding why we were looking for this short trade. So now let's jump to the charts. We'll start with the daily time frame. What do you see on the daily time frame? As you can see, it's in this bullish structure. As you can see, price is making higher highs, higher lows, and after this move towards those highs, we said that at some point price maybe want to retrace. Why? Because we had also we took this buy side liquidity, the previous highs from late April here, and after this move towards the upside, we said that it makes sense for the price to maybe start retracing, maybe looking for this shift and retracement lower towards those previous lows, these buy sell side liquidity levels. And with that in mind, we said that we can look for possible short trades here. Moving forward on the 4-hourly, what we notice is after market formed this Monday high up here, we said that we have this shift lower. What we see here, price was moving higher, and then we shifted lower, with this bearish displacement, with this bearish imbalance here between this first, second and third candle. So this low, this is the low we treated as a sell side liquidity, and any retracement towards the bearish 4-hourly imbalance we could look for as an opportunity to look for possible short move, short opportunity to target the 4-hourly sell side liquidity. So in this case we were looking for a retracement into the 4-hourly imbalance, and we use the lower time frames, 15-minute time frame, in order to trade this continuation towards those 4-hourly lows here. So in this case, this is the 4-hourly, and on the 15-minute time frame, this is the chart we send over to our students. So as you can see, this is the Asian session range high, Asian session range low down there. And as we were approaching the news within the US session, we marked those levels up from London. And in the US session, what we were looking for is a potential sweep of liquidity. Let the price, we were waiting for the price to break all those previous highs within this 4-hourly bearish imbalance in order to start looking for potential short move towards the low of the day, the 4-hourly sell side liquidity, the previous swing lows actually. Now let's jump back to the daily time frame again. So this is how the price was developing. As you can see, price bounced from this overall liquidity level, and on the 4-hourly this is even visible more clearly. So as you can see, after price came into this bearish 4-hourly imbalance, price spiked here. It spiked at this liquidity level, and as the price was pushing to the downside, this was a good sign, high probability sign that price want to move lower towards the 4-hourly lows, the 4-hourly sell side liquidity. And if you go to the 15-minute time frame, this is where we got our confirmation. So the Asian session range highs and the London highs were broken. Market, as you can see, spiked here after the news came out about the retail sales, about the USD. And on the 15-minute time frame, we had also this confirmed shift bearish imbalance. So this was really great sign. We had bearish imbalance confirmed after these lows, I mean highs of the day were taken out in combination with Asian session range at this 4-hourly imbalance. So we have entered that here, few pips, let's say late, because we were looking to enter a little bit higher, but price was very volatile, so we entered that here. Stop loss went above high of the day, above this structure, and our target was of course this liquidity levels down there. So we had Asian session range lows, we had 4-hourly sell side liquidity lows, and this was a good target to look for 1-to-1 in terms of risk and reward ratio. So this trade was made with around 19 pips stop loss, with around 21 pips target. And if I move forward towards the next chart, this is the post scenario. So in this case, as I said before, we entered it here at this confirmed structure shift after price took this sell side liquidity level. So we had previous London highs, we had Asian session range lows within this bearish 4-hourly imbalance, and after the news came out and price spiked here, we entered a short stop loss above the highs, above the structure, and we were looking for classic base one-on-one risk and reward trade here, targeting those liquidity levels down there, the Asian session lows and 4-hourly lows. Of course, if you would aim for more, you could even look for 2-to-1 in terms of reward and risk ratio. So in this case, with around 20 pips stop loss, you'll be looking for 40 pips target. But anyway, I was happy with this target, so I closed this trade in this US session. So hopefully this video is helpful. Hopefully you learned something in this video. So make sure you like and subscribe, because I'm releasing those videos frequently on my YouTube channel, so everyone can learn these things for free. And if you are disciplined, if you are ready to commit, then of course you can learn a lot from those videos. So thanks for watching, and we catch up soon. Take care.